Up next, boom or bust. We're going to have the latest data on new home sales. Stay with us. Also out this morning, new home sales for the month of March. They're coming in 12 percentage points higher. It's a record annual rate. Economists were expecting for a decline. Now, of course, also we do have some economists who are saying that housing's contribution to the economic growth may fade later on this year. For a little bit more on this group, we turn to Bob Moulton. He is the president of Americana Mortgage Group for his views on these latest figures. Bob, again, another amazing number coming from this sector, up 12%.
It's a pleasant surprise, and I'm surprised to see that the new home sales are up 12%. And these are sales that are committed before they're finished, so it's pre-construction sales. And from what I'm hearing, there's a lot of investors that want to get into that market simply because they can buy a home before the home is sold and possibly sell it at the time of completion at a nice gain. Before the home is finished. And they can make good money on their down payment. So if they put $10,000 down and the house appreciates $50,000, they can make $50,000 on $10,000. So that's what we're seeing a lot of in terms of people getting into the pre-construction market.
Haven't we seen this before? And it ended badly?
We saw this back in the 1980s.
Right.
And we saw the downfall of real estate prices. It could be a house of cards. It could be something that could continue to fuel. Back in the 1980s, we were writing mortgages at 10 and 11%. Now you're looking at 5 and 6%. And you're looking at interest-only mortgages, and you're looking at adjustables that can enable a borrower to buy more house. So time will tell, depends on where the interest rates go.
Time may tell, but your gut instinct, as you said, you've seen this before. Would you be doing that? I mean, would you be advising your friends and family to do that as opposed to being in the equity markets or the bond markets?
Well, you have three different types of housing transactions. People that are buying houses as a primary residence, people that are buying houses for vacation homes, we're seeing a lot of that opening up, and the investment market, people buying houses for investment purposes because houses are appreciating so much. 1 in 4 transactions last year were for non-owner occupied. That's the area that would probably be most sensitive to a rise in interest rate environments.
But you can't just say it'll just impact this one particular area. I mean, I think when this thing bursts or when prices start to come down, it pretty much impacts everyone.
It will have a trickle-down effect into the different areas of the housing market and different parts of the country. There's an overbuilding, from what I understand, out in the Las Vegas area and parts of the Southeast. There's a lot of new construction going on in Florida. Areas around major cities where there's limited housing and you have children of baby boomers now buying houses. There's limited housing there. The labor market's strong. I think those areas will continue to remain strong.
How much more oomph is there still left in this?
We have to see what happens, with the interest rate environment. We've seen the Fed funds rate go up 7 or 8 times over the last year and a half. Hasn't affected long-term rates. Long-term rates are where they were at the end of 2003. If that continues to remain the same this year, I don't think you'll see an effect for another year or two.
So it really is only going to be up to rates. This is the only thing that's going to put the brakes on this market is when rates start to go up and markedly higher than where they are right now.
Well, there's a lot of variables that go into this economic equation. We don't know what the effect of oil prices are going to have. We don't know if the stagnant stock market is going to have an effect, because if that continues to happen, people will move money into real estate. Are
you hearing about that? Are you hearing about asset allocation, people shifting from their portfolios in stocks and bonds to real estate?
It's happening in discussions in my peer group, in my industry. We're hearing people not making money in the equities market and thinking of getting into real estate.
And actually liquidating portfolios or just leveraging them?
I would say leveraging margin loans or even home equity lines of credit on a primary residence that they're using to buy a second or third home.
What about you personally? I mean, I understand that you've let go of some people. You've had to trim back some of your hiring. Are you anticipating that things are going to slow down in 2005?
Well, in 2003, we had record number of transactions industry-wide and in my firm in particular. Back in 2003, every media outlet had addressed refinancing. 2 years ago, refinances were interest rate driven. Right now, refinances are more need driven. And that segment of the business is down about 50%. The purchase market's up about 10%. The need-driven refinances are based on home improvements, college tuition, or people looking to buy that third property. So I just adjust our firm in accordance with the market demands.
All right, Bob, we thank you very much for stopping by today. We appreciate it.
Thank you, Susie.
Our thanks to Bob Moulton, president of Americana Mortgage Group.